The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Well, it was a good day in the soy complex on Monday. Cattle, too, had a pretty decent day led by the feeder trade, while quarter wheat found a little bit of pressure. Felt like largely just didn't have a story to move the quarter wheat markets to the upside, lacking a bullish scenario there. We're going to talk about the market trade, though. Joining us for analysis, John Heinberg with Total Farm Marketing. John, good to have you on the show again this week, and I know we're racing this thing close to the Christmas holiday, and largely we're kind of in that holiday malaise outside of a few different news headlines that kind of jump out at us here, and we had a few of those, one in particular in the soy complex on the day Monday, John.
Yeah, we did. And then one thing we've been really watching is what's going on with Argentina, and as well as this new president that we have in there, or the government that's coming into place. And last week we had the valuing of their peso, and that put some pressure on the soybean market in that regard. Just because again, those Argentina beans got cheaper, for the importers to go after. But then we get a headline later today that, Argentina's government is now looking at a higher export tax. They want to raise export tax on meal and oil up a couple of percentage points. Right now it's 33% for soybean oil and meal, or 31. They want to go to 33. And that's just the products that they ship out of there. That helped the soybean meal market. That helped the soybean oil market. And obviously we were already positive anyway, maybe just on some pre-rumors there, and that spilled over into the beans, So that's a front end type thing. Plus at the same time, we didn't see any export sales announcement today. Shipments were pretty decent at 1.4 million metric tons. Just in our group meeting this morning with us fellow advisors, I kind of talked about, wouldn't be surprised if we see some bull spread here, some money moving into the front end. We got that big NOPA crush number last week on Friday. We see good shipment number. That means there's going to be some competition for these front end beans and some bid and action probably going into them. And maybe that's some of the strength that we saw as you look at that January-March spread, January-May spread today. Saw some real nice movement on the charts, actually kind of breaking those spreads out to the upside a little. So maybe we'll get some follow through here. And I wouldn't be surprised because of the news that we saw that maybe we get also an export sale popping in the next day or so. Again, remember, sometimes those occur on, during the day and don't get reported for a couple days. So we'll see if the rumor mill brings that into light too. So there's some good news there for beans today. Nice solid close right at the top of the range. Mm-hmm. Tomorrow we got a lot of resistance on some moving averages over top. That 1235 to 1240 window seems to be always kind of a catch point. If we got enough momentum to get through there, and you can really see some money flow in this tighter, in terms of low volume market here.
And that's the thing, a tighter, low volume type of market is, we got the holidays in front of us. A lot of traders get out the last couple of weeks of the year. So you get a news headline like this that we saw out of Argentina on Monday, and that could definitely give us some decent pops here. Or if we get a negative headline, it could give us some decent downturns. So one would have to watch closely some of those resistance levels you mentioned on Tuesday in soybeans, and we can break through some of those. I feel like there's some potential here to reward a rally, John.
Very much so. And, I fielded a couple calls on that today. And, let's still keep the big picture in play. Now, we don't know where that Brazil crop's going to be. The market really doesn't have a good feel. You see it all on social media. You hear it from different analysts. You got good, you got bad. I did hear some whispers of 145 over the weekend, and that's 20 million metric tons. That's a pretty big drop in that crop. Obviously, those are some whisper numbers. So we'll see how that plays out. Again, we got the balancing act of the Argentina crop, coming back to its full potential, more than likely absorbing a good portion of that loss. So, so those things are still kind of out there, but does that keeps the export window probably a little more open into the first of the year? And then when we start dealing with the Brazilian harvest picking up a little more speed and those bushels that are there, as well as the Argentina harvest, then we look at our prices and we can just tell that we're not quite in the camp that they are. So that makes me a little nervous for that March, April, May window. But, in the front end here, if the money wants to push this thing, I think some targets up above. If you got some old beans you don't want to pay storage for, you want to get them moved, or should be probably in place here, and reward yourself, and then come back and shift that ownership to paper, whether you want to do it out into the summer or do it right here in the near term in case that Brazilian crop is really not where it needs to be. Take a look at some of those paper strategies and minimize that risk.
In terms of the corn market, felt like corn leaked lower with the wheat trade on the day of Monday. We could talk more on wheat in a second, but when you look at this corn market, John, largely we've talked about this ad nauseum that those bin doors, for the most part, probably shut till 2024 hits here in a couple of weeks. And to me, it largely feels like corn is probably just going to drift in these next 2 weeks. What do you think about this corn market right now?
I would say drift sideways to lower, just especially given the action today, unless we got some form of news to push it. It's out there. The funds have kind of shaved back that short position, so maybe they can go ahead and start pushing back into it. Don't forget, commitment of traders is put together on Tuesday, so we saw the funds tighten up their short position a little bit last week, but then the pressure came towards the end of the week as they got back into some of those shorts. There's things that we're watching in the news. Unless we get some type of bullish news, a big export sale. Today export inspections at 947,000 tons, top end of the range, but still nothing big yet for this time of year. We need to, though, that window's going to open up after the first of the year. But then you get stories too, though, about Chinese imports. In November, basically 3.6 million metric tons of corn got imported. That was basically a record for the month of November, and actually one of the largest import volumes they've ever had for a month. A lot of that coming from Brazil sourcing. This is despite them reporting a record corn crop. And that's disappointing the market because, again, we're counting on the Chinese to step in here and pick up some U.S. corn, and maybe they don't need it now. So stories like that come out, just kind of keeps the money maybe pushing this market to the downside. Today's close the lowest since the 30th of November. Kind of that weak price action opens us up to maybe take some more of this carry out of the market. And that's the one thing I'm still looking at was the kind of the big jump in carry when we got rid of December and into the March being the lead month. Maybe this market wants to tighten that up here a little bit.
Should we be concerned as producers here? We go through the next couple of weeks ahead, get into the first part of January. Should we be on our toes maybe? I guess instead of saying concerned, should we just be prepared for volatility and the potential of a lot of corn maybe flooding the market after the first of the year? John, what do you think?
That is a concern from on my side of it right now. Just, you hear what people are kind of talking about, the feel of people who got that are out there. First of the year gets here, we're going to move some corn, we're going to cover some bills, cover some expenses. Quite a few producers probably already have a March basis contract after what happened with the December contracts. Maybe they'll jump on those and pull the trigger and get that corn moving. Last year we sold off pretty hard the first couple trading days of the new year. And it very well could be in that same type of situation this year as we just finally see some corn moving. So I'm a little cautious. I've been staying on the defensive. My intentions are to stay relatively defensive until May. And then when we get the first numbers for 24-25 on that May report, that could be a pretty big number. And then from there, that could be our biggest numbers for the year. We'll see. What's the acre talk going to be? We'll get that in March. Right now the demand is still a concern, so we need to see that demand really pick up. And if we don't see that demand or those Chinese purchases do wait till the summer because of the Brazil crop, it's going to be real hard for this corn market to kind of kick in here at all. Other than maybe just some grind, like, bottom to the top of the range and back and forth like we're kind of seeing right now.
In terms of the wheat markets too, moderate pressure across the board on the day Monday, John. I heard some rumors Saudi Arabia's out there in the market looking to buy wheat, and you look at SRW, KC, or HRW, KC wheat, kind of felt like the downside leader on the day Monday. Any notes for you in the wheat complex overall, John?
I think a big part of it is the fact all of a sudden China's disappeared again. That brought some premium into the marketplace. That brought some short covering. Now we haven't seen a sale from them. Export inspections we're relatively low compared to expectations today, towards the bottom end of that range. So immediately we have to sit back and look at where U.S. wheat prices are compared to the world, add in some potential moisture in HRW country coming through here. That weight on that contract down 15 cents or so today. We had a nice little run, and maybe it's just a sign that it might be just over again, probably until proven otherwise. When you get good rallies, they need to be sold until we really do see some type of fundamental change. We still got to struggle with U.S. competitiveness against the rest of the global wheat prices. And that's still going to be something that's against us right now here in the short term. And like I said, the Chinese business has kind of disappeared. And realistically, since then, this market's kind of topped out and started to drift some premium back.
We are having a conversation here today on Market Talk with John Heimberg from Total Farm Marketing. John, let's move over to the livestock arena. We got a cattle on feed report and a quarterly hogs and pigs report coming up Friday after the close. Interesting timing as we'll head into Christmas and a shortened holiday week next week before we can really digest those numbers. One has to wonder if the trade could possibly set themselves up like we typically do and trade ahead of those reports here this week. And in terms of cattle, feeders had a pretty strong day on Monday to start off the week. So your thoughts on those reports coming up and the potential outlook in this livestock trade overall this week, John?
Yeah, we got a good chance. So you've seen some of the prelim numbers that those placement numbers start getting back to the negative side. Again, in terms of the cattle on feed reports, we saw 2 months of really strong placements, probably pulling some cattle forward, getting them off pasture due to dry conditions or cheaper. The lot had room and corn prices got something cheaper, so they could go ahead and bring those cattle in. A lot of it was imported cattle from Canada and Mexico. But it sounds like here, again, at least what we're seeing, again, that trend is still not there in terms of the supplies. And we might get ourselves back to a little bit more of a supply concern type market. I do like the third and fourth quarter if we do start seeing those placements come back like that. And again, projections are for 4 to 6% under last year here for the December placement number. So if that's realized, that will bring some concern. I think you're seeing some covering going into that. Cash trade, retail values of front month fundamentals are not very strong today. And we actually had a little bit better day going in those front end until we probably saw those retail values drop back under the 290 choice level today. Cash down $1 again, $1.70 seemed to catch most business. So we need to see some stability there in the front end. So the cattle and feed number, again, gives us some placement, or at least gives us those ideas where we're going to be, maybe give us some good value. You show us that third and fourth quarter, could be undervalued again. I think that's somewhere where we're seeing the most of the money flow going right now with the anticipation of those reports.
And I think it's going to be interesting as well with the anticipation of those reports. And then you think about, a lot of traders want to try and get business done early this week. What could that do to the market? And then, how thin could both cattle and hog trade get next week between Christmas and New Year's? One has to wonder what we could see there as well, John, and the impact that could have on the market.
Yeah, again, very much so. When you get those thinly traded markets, there's just a lot of gaps in between prices, and the markets that are lightly traded, such as feeders, cattle and hogs, obviously traded more heavily, but nothing like the corn market is. That opens us up for some pretty good volatility. We go touch on that hog market quickly. December fell off the books. February is now in charge, paying in a pretty big premium to the cash index, and that cash index just does not want to get any footing. So that makes me a little concerned that nice little rally we had in the February hogs is now probably, maybe hit its peak here. We ran into some pretty key moving average support today, kind of lost its gas up there. So it feels like we're back on a bit of a slippery slope in that hog market, especially since you got that index trading, almost $4 underneath, a little over $4 underneath the February, and the cash trend is still lower.
John, I see some red in Class 3 milk futures on Monday, kind of mixed across the rest of the dairy parlor. Any notes over there for us?
I don't like those cheese prices today, pushing to the $1.40 plus level today, down to another 4 to 6 cents, barrels or blocks respectively. That just opens those charts up. We were hoping maybe we could put a little double bottom in that January chart, here with the last week of trade, and that just kind of got blown apart on Thursday and Friday, and as well as today. So it feels like the slippery slope continues. Now we're searching for new lows. So, can we get down to the 15 handle? Does that hold? That'll be our next kind of psychological number. But the products just continue to struggle here, especially with cheese trading $1.45 for blocks and $1.40 for barrels. Milk at $15.60, to me is still probably a little overpriced. And I'm definitely looking at some of those spring, summer months and the 17s and 18s on the board going. There's still some pretty good value there in a market that's on a pretty big slippery slope.
Well, John, it's going to be a few weeks before you and I get to talk again with the holidays coming up. So as we wrap up today's show, I'll kind of leave the floor open to you. What are some final thoughts? What are some things you want folks to remember here as we go through the next couple of weeks and roll that calendar into 2024?
Obviously the biggest thing is look at value. Okay. Protect, there's some group or whatever you want to call them. People think that the markets are undervalued. Things need to go back higher. And realistically, at least in the corn markets or the grain markets, between corn and wheat, the supply, the demand, those things are not dictating that at this time frame unless we see some changes. Don't fall asleep on 24. We're about $5 plus. I know last year we were talking $6 puts, and then we come up December at $4.60. Not saying that we're going to get December next year to $3.60, but I'll tell you, if carryout gets over $3 billion, the demand doesn't pick up. That South American crop is better than we anticipate down there. It's going to be a very difficult, position for the U.S. producer to be in. And remember, markets are cyclical. We had our cycle to the upside, and maybe now it's our cycle again about larger supplies and tough prices. So as a manager, you need to be on top of your game, know your numbers, and protect the value when you have it, and hope you're wrong and the market's there to reward you. So still a lot of risk out there, given where we are in terms of the markets. And just the old saying is markets they don't have to do anything in terms of price. The people in Chicago or the traders, they don't worry about what your profit levels are. They are going by what the money flow is and where the market is compared to the globe.
John, great thoughts. If folks want to reach out to you with questions there at Total Farm Marketing, I know a lot of ways to get in touch with you. How can they reach you?
Sure, love chat with them anytime. Give me a call, 800-334-9779, or shoot me an email at johnh@totalfarmmarketing.com. And don't forget that website of ours, totalfarmmarketing.com.
John, thanks as always for being a guest here on the show. Wish you and yours a Merry Christmas and a Happy New Year. We will talk to you when the calendar rolls over to next year. Thanks so much.
Sounds good. We'll see you in 2024.
John Heinberg with Total Farm Marketing, our guest today here on Market Talk. That's going to do it for the program. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.